As European markets opened and reports came out that Putin was withdrawing some troops, futures exploded higher. It appears that, at least temporarily, Putin has folded his cards, and with that the stock market elated. But crude oil puked with the cut in geopolitical risk. Similarly, safe haven bonds and bullion also sold off. Yet it seems everyone has forgotten about the hotter-than-expected PPI report, which left rate hike odds up near the highs with a 60% chance of a 50 basis point hike in March. But watching the tape toward the end of the day saw a massive buying program step in and rip everything to the highs. In the end, small caps and a Nasdaq outperformed. The Dow and the S&P 500 lagged, but still managed to gain over 1% each. And as a side note, Warren Buffett and Berkshire, in a timely fashion, bought a little bit of Activision Blizzard stock just before Microsoft announced a buyout of the aforementioned company. That little investment of $975 million may make Berkshire over $200 million if the buyout is complete. It's an odd investment for Berkshire, so I wonder if Pelosi got a piece of that action too. Well, let's take a look at the charts. Two quick charts today, beginning with the 20-year monthly chart on the spiders, the SPY, and the close on Tuesday was 446.10. Here's what we were watching, at least in the long-term chart, is this rollover at this point here. We're still above the 20 EMA and the 50 EMA. However, that separation can close quickly, depending upon how far these oscillators fall. There is a relatively decent risk here. I'm not waving the red flags, but I'm definitely waving the caution yellow flags. Moving on down here, and the volume hasn't picked up too much, but we'll see. Here's the problem. The black line, or the fast line, is rolling over. Now, it has not come down and through the slow line, but it's oh so close. And with this elevation up here, things are strong, but if that fast line does move through that slow line, it could be a pretty quick ride to the bottom. So, stay tuned. Here, the histogram shows pretty much the same, that rollover, but things are eroding pretty quickly. Moving on down to some of the other oscillators, price rate of change, you can see moving on down relatively quickly. Relative strength index, the same thing, as well as the stochastics, and of course the Williams. They're all heading on down. Now, we may get a reprieve if the market is able to move down but reflect back on up. It's possible, especially with the trading here today on Tuesday. So we'll see if we pop back on up. But if we do, say, reflect and recover and head back up, then that brings the possibility of a double top, which is just as dangerous. We'll be watching that. But let's first go see what the daily chart shows. And now the 1-year daily chart, and what we saw today was from Monday we bounced on up here to 446.10. So repeating what I said over the weekend, we have a W formation here through here and down here. Wasn't quite sure how far down we would go. I'm a little bit surprised that we would turn here, but with the news given that the Russians may be retreating somewhat, at least temporarily, maybe we get that bottom at this point here and have enough strength to head on up. So you see that W formation there, just as you see W formations here, as well as here. Maybe not the best, but you can see these W formations are relatively common, or they're not uncommon. And here's another one like that. So it's very possible we get this recovery, head on up, back into that channel. Not a real straight line, but you do get the idea. We'd have to head on up here quite a ways, but it's possible. Now, Moving down here to the other oscillators, you can see the possibility here. A little bit of a hitch at this point in the MAC. The fast line came down but got reflected, so we'll see if that reflection continues on up there. Same thing here in the histogram, and no real surprise in the price rate of change. The RSI looks a little wonky, the stochastics, and then of course the Williams. Back up here to the price chart. Once again, if we get that reflection and then the strength to move on up, but it's going to take a lot to bring us back into this channel here. There's a better line. That strength needs to bring us up to near 480. It's possible, and I think it's perhaps likely if things continue in the same direction. The problem, as I said in the long-term or the monthly chart, is once we get up here, there's the possibility of a double top there and here, perhaps even coinciding with the underside of this bottom channel line. So that will be a problem. We'll deal with it later. For now, we just want to see if we have enough strength moving on up. But I don't think this is the time to start playing trading in the market. I think it's just time to sit back and watch, keep what you have, make prudent decisions, and save some cash. And for today, that's ChewDog Charts. Thank you.